G'day traders, Stacey Burke from Stacey Burke Trading. Today reviewing again the importance of looking at the range, the closing range, the breakouts and pullbacks. Again, we talk about the three types of scenarios with price breakouts. Number one, we look for a breakout, a retest, the market filling more orders, and then a continuation happens. Price will break out, retest, fail to hold and reverse, commonly called the false or marginal, false break, marginal new high or marginal new low. And then a price break, retest, a fail, and the market going into a trading range. Now, if you've read Dalton's book, Mind Over Markets, Power Trading with Market Generated Information, you know that when a market opens out of balance, the potential for a dynamic move in either direction is very high. Conversely, a market that opens and is accepted within the previous day's value area or range usually has less opportunity. So what that means for us as traders is that, especially if you understand initial balance, the first couple of sessions in a trading period. So in our particular case, if this was the hourly session, I use the Monday, Tuesday, Monday range. But again, if we went back, just looking at the Mexican peso, we'll look at all these pairs. But again, so we look at the Friday, and we can see that Friday, in comparison to the previous week, the market was still in range on the Monday morning, within Friday's range. But if we call this a profile or a range of trading, the market opened up towards the lower part of the range on Monday. The red bar designates a Monday again. The market auctioned, traded higher, and then during the course of the US session, London closed, traded to new lows, and closed outside of that range. So this is an example of a market going out of balance. So if we were to look at the daily chart, we would see a day that's closed outside of the previous day's range. Now, what's important about that, again, if I read this back to you, we said in Dalton's words, when a market opens out of balance, the potential for a dynamic move in either direction is very high. So what we're looking to try and identify perhaps is high probability or high possibility days for a fairly decent amount of movement, either to the market accepting that value outside of that previous day's range. As you can see now, if we project that previous range across, the market came up, tested that into the Europe session, and then auctioned lower, and then during the US market came back inside of that range, and then into Wednesday's open continued to auction higher and do a measured move, so a range extension of that first leg up. So again, it's important. So we can see that the market, now has closed back inside of the range that it broke out of. On the Wednesday, it auctioned and still again is inside of the previous day's range. We go to the Thursday, and the market again now, if we compare this to Wednesday's low, we see that the Thursday close, again is out of balance. So it was rejected on Tuesday, came back into range. We see the markets tested that, auctioned lower, and gone out of balance again. So on Friday, the market was out of balance. And this is an example of where price broke out, auctioned and accepted price below, and then continued. So we talked about one of those three types of breakouts. Price on the Tuesday broke out on Monday's close, auctioned into a range, came back into range. The market again attempted to break out on Thursday, filled more orders, and continuation happened. So again, these days that go out of balance. So if we go to a daily chart to look at that, just look at the blank. Actually, we'll clear that chart. Blank daily. So if we look at the daily chart on that, you can see that Monday was outside of the range of Friday, Tuesday came back into range. Wednesday back into range. So if we had our initial balance, again, our initial trading range, the market broke out on the Thursday and then continued. So yeah, obviously some people might say, well, that's a trending market and that was easy, but we're just going to look at any market and apply that same principle. So again, if we look at the Japanese yen on Friday, we saw that Friday had closed out of Thursday's range. The market was out of balance. On the Monday morning, on the Monday morning, the market was out of balance. As it opened, it auctioned sideways, stayed in outside of the Friday range. Tuesday again, testing that breakout level, and then again during the US session, broke down. Wednesday morning, we have the market again. We talked about the London fix, so the 18 o'clock candle where the London market closes, just another area to keep an eye on. The market continued to auction down into the late US session, and then early Asia stayed outside of that range and again continued on. So again, what we're looking for is to identify days on the daily time frame. And again, we'll go back to this, where the market goes out of balance or is already out of balance, accepting. So out of balance is where the market has traded and closed outside of the previous day's range, or even on a Monday if it's opened up outside of the previous day's range on a gap. So again, just to reiterate, the three types of breakouts: price breaks, retests, fills more orders, and continuation happens. So we have an example of that here. So the market broke out of the Monday range on Tuesday, filled more orders, continuation happened. Same thing on the Wednesday, market broke out, filled more orders, continuation happened. Thursday, no breakouts, but we had range extensions, and we're still in that range now, waiting for some kind of indication of a new breakout and possibly some new direction from that. So if we look at the pound yen, we go back and we can look at Thursday, Friday. We see the market Thursday's range. Friday closed inside of that range. Monday, again, the red line. Monday closed outside of Friday's range. So again, possible high probability day for volatility or movement. We see the market broke out, rejected that, came back into range, and then into the London Open, retested the previous high from Monday. Then the market rejected that breakout. So we have our false break now. Market came back into range, traded down into the London close, into the late US session. Early Asia, auction sideways. Again, broke out and did a measured move of that first leg down from the original false break breakout. Then the market has broken out of the previous Thursday, come back into range, and now we've gone into a trading range. So again, looking for days on the daily chart where the market goes out of balance. Then on the hourly chart, if you're using hourly charts, we're looking for markets to break out, retest, fill more orders, and continue. Break out, retest, and fail, and possibly reverse, causing the example here, the false break, or breakout, retest, failure, and going into a trading range, which we see in the last couple of days of the pound yen. So traders, look for these out of balance trading days. Again, if you're not familiar with Dalton, click on the link below, get his book, Powerful Information, Mind Over Markets, Power Trading with Market Generated Information. Again, talking about when the market accepts the trading going out of balance, and when this happens, the potential movement, it can be very dynamic and a great opportunity for traders. So, in his words, it's a market when it's out of balance is like a ball that ricochets off a piece of jagged concrete. There's no way to estimate how far it will bounce. Potential range development is unlimited, and the risk can be extremely high for traders who are positioned in the wrong direction. So that's where it's really critical. And you can see on these trades, again, I talk about this all the time. I really harp on managing the downside, cutting your losses. I'm looking for a 1-hour stop and a 3, 4, maybe 5-hour on some of these trades return on my risk. So, you never perfect this. Traders, don't focus on perfection, focus on progress. Focus on constantly getting better and improving your skills. I didn't say it was easy, but I said it was worth it. So stay disciplined, stay focused, look for these out of balance trading days. Really study those 3 types of breakouts. And if you can master that, traders, your trading is going to go in the right direction. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.